Alrighty. I believe that we're live. All right, I'll let everybody in. Welcome everybody. Yeah, thank you guys all so much for coming out tonight. I can just do a little introduction while everybody joins in. Usually we have some people that hop in sort of mid-meeting after it's been going for a bit. And thank you for anybody who's watching on Facebook or on YouTube. And welcome to the First Time Homebuyers webinar. So just a quick introduction on myself. So I am Sam Thompson. I'm a mortgage agent in the Barrie area. And yes, but I am serving all of Ontario, and I work with Joe Bladdock, who is a mortgage broker, again, in the Barrie-Simcoe area, but serving all of Ontario. So if you look in the chat, I've just put a quick schedule of what tonight's going to look like. So I will begin chatting and go through a quick presentation on the mortgage process, why to use a broker, a lot of the mistakes we see first-time buyers that are making, and the most important part is probably how to get some cash back in the process. And then I'll cover off a quick bit about what the home buying process looks like, and then I'll open it up for question and answer. So if any point during either of my presentations, chatting about the mortgages or also chatting about just the home buying process, if you have any questions, feel free to drop them in the chat or comment it below. And then once I finish off my presentations, we'll round off to just an open discussion on any questions that you guys have.
You can't see us.
And I will go ahead and share my screen with you guys, and then we can get started. Okay. Alrighty, so again, welcome to the First Time Home Buyers webinar. I can go ahead and get started now.
Push the up arrow.
So again, just chatting quickly about myself. So I'll cover off the mortgage broker process, some of the things that will be required to get your mortgage, a lot of the mortgage mistakes that we see first-time buyers make, how to get some money back when you buy through. There's a ton of grants, incentives, and all of that are available to you guys as first-time buyers. I'll also be chatting a bit about a down payment, and then I'll cover off the first-time buyer incentive. So again, just a bit about myself. So I work for Verico Mega Mortgages. We're based out of Barrie, but we can serve all of Ontario, and we do quite often work with brokers and realtors down in London and Thunder Bay, Sault Ste. Marie, all of these areas. And traditionally, or typically in the office, I work with a lot of the first-time buyers. So before I get ahead of myself, I do want to announce that we are running a contest as well. So in the chat, you will see a link to book an appointment with myself. If you book that appointment and you meet and chat with me, we're also going to be giving you one entry into win a Tim Hortons gift card. That's $25. So if you would like to book an appointment with me, you can either click the link that's in the chat or email me at the email on the screen, and we would love to see a couple of you guys win a Tim Hortons gift card. So just getting in, I really like to open up with a quick case study. So this couple was Jennifer and Joseph. They came to one of our seminars. Yes, we used to have these in person once upon a time. Now it's all run on Zoom. But they came and they only had just under $2,000 in their bank savings. They didn't know what their credit score was, and their household income was about $65,000. So this might look maybe a little familiar to some scenarios. And what ended up happening was that just a few months after they attended our seminar, we got them a pre-approval. We got them into a house with about $500 biweekly mortgage payments. So really, we like this just because regardless of where you are in the process, we can work with where you're at, some programs that are available to you. And our goal is really just to help you guys achieve home ownership, regardless of if you don't even know your credit score, to if you're somebody who, checks their Equifax regularly, has tons of savings in a emergency fund for your down payment, anything like that. So where do you typically start? So generally, we'll say by starting starting by getting pre-approved. So a pre-approval is really important, and it's a really great first step in the process because it'll help avoid disappointment, speed up the process, and can save you thousands. So the only thing I could imagine that would be really rough is if you meet up with a realtor, you start looking at houses, you find your dream home that's $550,000, and then only to realize that you only qualify for about $400,000. So we want to make sure that with a pre-approval, we'll give you an accurate number of what you qualify for and what your maximum purchase price would be. It also allows you to know what to expect so that when you're working with your real estate agent, you'll have an idea that what you're looking for is in your price range, as well as it does include a rate hold for 90 to 120 days. Alrighty, so how do you get pre-approved? So generally it starts with a text, or there's typically a email that you'll get later on, or by clicking the link in the chat right now, that will book an appointment with myself, and I will cover off any questions, the pre-approval process with you from there. So it's done over the phone. We can do it over text or email or Zoom. We've been meeting with a lot of people on Zoom. We don't have to meet during the whole process. So you don't need to take any time off work. We don't need to meet at a Tim Hortons. We can do it over Zoom. And really it doesn't take that long. You really just need a pay stub as well as your photo ID. And then the rest of the documents you can send via text, email, or fax. So again, most of the process is just done over email with our office. So why would Canadians use brokers? So we have access to more products. If you're chatting with a mortgage agent or broker, we have access to other lenders outside of just the big five banks of Scotia, TD, or CIBC, right? We have access to a lot more lenders, and therefore we have access to a lot more products, and finding mortgages or cashback offers that are available to suit your needs specifically. Also, we're able to protect your credit score by just doing one credit check, which is valid across all of the lenders that we work with. So rather than going to each bank individually, getting a pre-approval, having them run your credit, and each credit hit is actually going to hit your score a little bit. So by working with a broker or an agent, we just do one check, and that's valid across all the lenders that we work with. And we know that buyers have a unique story. So we're actually the ones that are primary contact with the underwriter at the lender, advocating for your story. I know that there's been people, clients that we've worked with in the past that, they have had, they've had a bit of credit discrepancies in their past. And we had found that at that point, they were only on seasonal part-time work, but since then they've acquired full-time permanent employment. So we were able to communicate that in the notes and explain that to the lender. And probably the best part about using a broker is that it's completely free. Nowhere in the process do you pay a broker. We get paid by the bank once your mortgage is funded. So really, we work directly for you to make sure that you get in and you get your mortgage. So here's just a list of some of the lenders that we work with. Some you might realize as, that could be your bank that you currently work with. Others you may not notice or realize, but a lot of them are actually funded by some of the big five banks. So really it just highlights a lot of the products that are available to you as a home buyer. So again, finding mortgages that fit is super important. We want to make sure that you're getting the right mortgage to suit your situation. If you're looking for a short-term or portable mortgage, if you're looking for a new build mortgage, purchase plus improvements, there's a lot of different products that are available to you. And by chatting with us, we can really pinpoint, which one works best for you and what will help you best in your situation. There was also a study that was done that stated that brokers save their clients on average about $42 a month compared to going to a traditional lender directly. So we've worked it out, and that's about a small Timmy's coffee every weekday of the month. So if you would like to save money, you want to get a mortgage through us, we will also buy you a small Timmy's coffee every weekday of the month. So now that we've established the differences between using a bank versus a broker, I'm just going to cover off what a lot of the mistakes that we see in the office, and a lot of them people don't even really know that they're making. So mistake number one is ignoring your credit score. It's not good to not know what your credit score is and end up, getting stuck with a bad rate because you hadn't, found what your score was and made improvements to them. We also It's really easy to check what your credit score is. You can either get a paid one through Equifax or TransUnion, or you can also get free ones through sites like Credit Karma, or even a lot of mobile banking apps allow you to check what your credit score is. Now, getting a free one, it's not going to be the exact same number that we see, but it'll at least give you an idea so that sort of where you are credit-wise before applying for your mortgage. And if you are somebody who has gone through a bankruptcy or consumer proposal, you're definitely not alone. There are a lot of people that we've worked with and we're able to secure mortgages for that have gone through a consumer proposal. So we really want to recommend, if this is you, that you follow the 2-2-2 rule. So what this rule is that the banks are not going to lend you a mortgage until you have had at least 2 credit cards for a minimum of 2 years with a $2,000 balance. So if you've been discharged from your consumer proposal and haven't done it, that's going to be your best step moving forward. Just to get a quick breakdown of what your credit rating is in terms of poor all the way to amazing. So if you have a credit score that is 700 or above, you have really, really good, strong credit, and there really shouldn't be any worry of not qualifying for the day's best rate. Anything close to 500 or below is needs a bit of work. So from there, we can look at some strategies to help improve your credit score, but it's going to be really hard to find an A-list lender who will be able to secure or provide you a mortgage with a score, below 600. So just looking quickly at what goes into calculating your credit score, you'll see the biggest portion is actually your credit history. So that means if you have any credit cards, from high school or your college days, if you keep that credit card, it keeps that credit history alive. So at any point, if you switch banks and you cancel a credit card, you actually lose all the credit history. So some people might notice that if they have a loan that's in repayment, as soon as they pay the full loan off and close that account, they might even see that their credit score takes a little bit of a hit. It will eventually reestablish, but it's because you're losing all of that credit history. And in terms of debt owed, which is the second biggest portion, we like to ask, is it better to have $90 on a $900 on a $1,000 credit card, or is it better to have $900 balance on a $10,000 credit card? So it's a lot better to have $900 on a $10,000 credit card limit, because what it's communicating to the lender, if you have a $900 balance on a $1,000 credit card, is that you're using 90% of your credit limit. So that's actually going to be affected, and you'll see that as a result in your credit score. So if you believe that you can handle the credit limit increase and your bank is offering you to increase your limit, you can just accept it and thank them for helping you actually have and develop a better credit score. Mistake number 2, I went over a little bit earlier, but is not reviewing your options. So in working with a broker, we're going to have a lot of different rates available to you, whether it's variable or fixed, a lot of different lenders, different ways to pay, and different penalty calculations. So just going into rates, if you were to say lock in for a fixed rate and there was an option for 2.24% and 2.39, really doesn't look like a big difference. It's only 0.15%. It doesn't seem like a very big change. But over the life of your mortgage, that's going to save you actually just under $10,000. So really, when working with a broker, getting the best rate that's available to you is going to be a huge step in saving you money over the life and whole process of your mortgage. Different banks, again, I went over this earlier, but there are more than 1,000 different mortgage options that are available to you. Different banks and lenders will have promos, they'll have cashbacks, as well as mortgages that suit the specific home type that you're looking to buy. So by chatting with myself or Joe or even Terry Lynn at our office, we can figure out which lender as well as which mortgage product will suit you best. Looking quickly at monthly versus biweekly payments, we do also see that biweekly payments, as shown on the chart here, actually will save you quite a bit in interest over the life of your mortgage. Compared to a traditional monthly payment. And this is just because you're making more payments per year. So it's actually saving you in interest costs because you're making more payments. Penalty calculator. So this is a big one. A lot of people really don't realize. They like sticking with, CIBC or TD because that's where they're banking at. They have their card. They can just go right to their branch. But sometimes life happens and the only option is to break your mortgage, whether you're going to sell your home to purchase another one, if you go through a separation and you need to split assets at any point. If you're changing the terms or title of your mortgage during the term, it's going to incur a penalty. So there's a lot of lenders that will offer penalties closer to the $5,000 range. Compared to, I know last year in the summer, there was an article that I had read from somebody who had a mortgage with TD, and they were stuck with almost $20,000 in penalty for breaking their mortgage. So that's not covered by, your mortgage insurance or by the lender. That all comes directly from you. So it's a really important thing to remember in the process. Mistake number 3 is borrowing too much. So we don't want you to extend yourself way too much that you aren't able to live in the new home that you've purchased. We want you to be able to, continue ordering from Uber Eats or, extending the Netflix subscription. But we don't want you to borrow too much that it overextends yourself and you can't, make those payments. And on the topic of borrowing before you buy, if you're looking at getting a car loan, make sure that you get your mortgage first, or even after you've been approved, wait until closing before getting a car loan, because we've seen that even a really low monthly payment of like $300 can really heavily affect your maximum purchase price that you'll get approved for. So cars are probably one of the worst things that we see for affecting people's maximum qualified amount. Forgetting about closing costs is also very important. So typically when we did these webinars in person, we had an awesome laminated folder that we'd hand out, which had a breakdown. But you're actually going to be receiving an email, which will have a link to see the closing costs worksheet. But that is also something that does sneak up on a lot of new buyers. Because it's not included in the down payment, it's not included in the purchase price, but it is recommended that you have about 1.5% of the purchase price saved to cover closing costs such as land transfer tax, legal fees, all of those things. Again, there are some rebates that can help you with softening the closing costs a bit, but we'll get to that a bit later. Mistake number 5 is just simple enough not getting pre-approved. It really only takes, a 5 minutes, typically more like a half an hour meeting to discuss your financial situation, what you qualify for a mortgage. It's completely free and can help you win an offer because it does show that your scenario, your employment, your income, all of that has already been looked at by a lender and they have offered a pre-approval. And plus, it can be done completely virtually. And it really does help you avoid disappointment. So after you do that and you have your pre-approval, you really want to start setting up your home buying team. So this is going to include a mortgage broker or professional, as well as a real estate buyer's agent. So buyer is underlined because it's very important that you have your own buyer's agent who is looking out for your interest as their primary duty. I know if you're working with the seller's agent, their primary obligation is to the seller before working for you. So finding a great local real estate agent, buyer's agent, is going to help you drastically when you're searching, because they will get to know your situation and they'll be able to take you to properties that suit what you qualify for. You'll also want to set up your own home inspector, your own insurance broker, and your own real estate lawyer. So all of these, we can refer you to some great real estate options for an agent, as well as lawyers in your local area. So case study number 2. So I'm just going to cover off another couple that purchased over in Tavistock, Ontario. So they got over 1 acre of land for this. So it was a few years ago, so the price is a little bit lower than what we're maybe seeing currently, but they were able to purchase this property for $329,000. They put $16,450 as a down payment, and they were making biweekly mortgage payments of just under $700. So what ended up happening was after 5 years, the market value of their home had increased to $419,000. They had $339,000 in mortgage left, so they had refinanced in that window between the 5 years. But from this point, they could sell and take $140,000 in equity to their next home in 5 years. So this really is just showing how great of an investment real estate is. And it's also explaining a method that a lot of first-time buyers use, which is the snowball method. So your first home doesn't always have to be your forever home, because as you're living in it, I've heard it referred to by a couple other real estate agents before, your home basically becomes a third income for your household income for your family. That after the 5 years, your house has been working hard, and you actually get to enjoy the appreciated value plus the equity that you've earned in that home over the years. And then like this seller could take that $140,000 and drop it into a down payment for a bigger place if they're looking to move to a different area for work, or even if they're looking at expanding their family. So now we're going to be going through some of the first-time home buyer grants, rebates, credits, and refunds. So if you came here looking to save some money in the process, get your pen and notepad out, because there's going to be a lot of really good savings here. So first-time buyers are actually entitled to a refund of about $1,000 if they purchase an energy-efficient home. So they can receive a refund of approximately 10% of their CMHC insurance premium if you purchase an energy efficient home. So to break that down, if your purchase price was $425,000 and you were able to put the minimum 5% down, that refund works out to be just over $1,000 back to you. Included in the closing costs is going to be your land transfer tax. So as a first-time buyer, there is a land transfer tax rebate available to you, which is a refund of approximately $4,000. Now you'll see there's also a Toronto land transfer tax rebate, because if anyone here is watching and they're looking at purchasing in Toronto, I doubt anybody is, but if you are, they also have a Toronto municipal land transfer tax. So there's an additional $3,700 that's available to you. So if you are purchasing a new home in Toronto, you are applicable to a rebate of about $7,700. If you are new to Canada and you're looking at getting a mortgage, there is an awesome incentive that's available to you, where they've actually reduced your employment requirements to just 3 months from the typical few years, as well as there's no credit score that's required. So if you are new to Canada within 5 years as a permanent resident, you can apply for this incentive, and they will just use bank statements, insurance statements, and phone bills to calculate what your credit score is. If you're looking at purchasing a new build or building a new home yourself, you will have to pay HST taxes on that new property. But as a first-time buyer, there is a rebate available to you to cover off, or at least help offset, this cost. So for example, if your new home cost you $425,000, the rebate works out to be over $33,000 back to you. So on a lot of anyone who has purchased a new build or has a family member who has, they will know that the HST can also sneak up on you as a fee that you are required to pay. There's also a tax credit that's available to anyone who's a first-time buyer. So this is just on your income tax form, and you'll file it the year after you have purchased your new home, and the credit is up to $5,000 that is available to you. So we just worked out for a family with a household income of $85,000, that actually ends up being just over $2,000 back into your pocket. There are also some lenders that we work with that will offer a 1-year free home warranty if you are a first-time buyer. So it covers home heating, air conditioning, electrical, water heater, and plumbing, and it covers up to $10,000 with no inspection required for the first year. So we like to always say that, Murphy's Law, if something's going to go wrong in your home, it's probably going to be within your first year of home ownership. So it's a great program to help cover yourself for that. If you are looking at buying a home, but you don't have the savings necessarily in your actual savings account, and you're looking to use your RRSP as a down payment, you can do this through the home buyer plan. So each home buyer can withdraw up to $35,000 or $70,000 per couple, completely tax-free from your RRSP. So this will save you an additional $21,705 in tax. So to qualify for this, you just have to be a first-time buyer, be a person with a disability. If you're purchasing a home for someone with a disability, you will qualify, or just if you haven't owned any property in the last 4 full calendar years, you can apply for this incentive as well. So looking at some other creative ways to get a down payment if you don't have one, or you're just needing a little bit of assistance in making that 5% mark on the purchase price. So all of these municipalities that are listed on the screen all have municipal housing grants. So this is money that will go directly towards the down payment of your home as a first-time home buyer. So because it does vary depending on the municipality, these facts are a little bit generalized, but typically it's offered to applicants that are currently renting in the municipality they're getting the loan from. And it either puts 5 or 10% down towards your first home. And the biggest thing about this program is that it's completely forgivable after 20 years. So if you live in the home as your primary residence for 20 years, the loan is completely forgiven and there's no repayment that's required. The only downsides is that it is municipally funded, so there's typically a wait list, and you will be, contacted once your name comes up on the list. And if you would like to have access to the municipal housing grant, if it's available to you, definitely reach out to us and we can get that emailed out to you. Other ways of getting a down payment can be through rent-to-own programs, gifted equity from the seller, money from family. Having a co-signer is becoming very common, especially in a lot of first-time buyers, just to help increase your household income by having a parent or a family member co-sign with you. So I know I covered a lot of information, a lot of rebates, figures, numbers, a lot of percentages. But if you tallied up all of the grants, rebates, incentives I just covered off, it would actually save you about $52,000 if you were able to apply for all of the ones listed on the screen there. So I don't expect you to remember every single one, the exact qualifications for each, but the most important thing about this slide is just that all of these savings are available to you as a first-time buyer, but a lot of first-time buyers don't know that some of them exist, or some people don't even know that any of them exist. So it's awesome to work with a mortgage agent or broker such as myself, because I can walk you through which ones are available to you and walk you through the process of applying for each of them as we're going through the home buying process. Just as a quick reminder, I did want to remind everyone for the contest. So if you schedule a pre-approval appointment with me using the link that is found in the chat, that'll count as an entry towards winning a $25 gift card to Tim Hortons. Or you can also email me alternatively at the email on the screen. Definitely, as the weather gets warmer, I am much more inclined to a ice cap. So I would love a $25 gift card. So all it takes is booking an appointment and we can get you on your way to win a card. So now let's look at getting the first-time home buyers incentive. So how does that work? So the incentive is a government-funded loan that actually adds either 5 or 10% to your existing 5% down payment for the purchase of a home as a first-time buyer. So if it's any existing resale home, you can only get 5% down. But if you are purchasing a new construction as a first-time buyer, you can get 5% or 10% towards the down payment. So looking at this this illustration here, it actually outlines the difference between using the incentive versus just applying as normal. So on the left, or sorry, on both columns, you'll see that the buyer's income is $100,000. The home price they're looking to purchase is just over $421,000. They both have the minimum 5% down payment. The only difference is the column on the right has the additional 5% through the incentive. So now we see almost a trickle down effect of what happens. So now the insured mortgage is lower. That also lowers the mortgage insurance premium that's tacked onto the mortgage, and it saves their monthly mortgage payments $123 each month, or per year, just under $15,000. So all of that money that you're saving in that process, it goes directly back to you. It can either be, start depositing it into an emergency fund. You can even save it and actually put it as one of your lump sum prepayment options. That money is fully yours to do with what you wish. If you've been eyeing the installing a hot tub on your property, saving that a couple years and you'll be able to purchase that. That money's completely yours. So looking at what properties are eligible, any new construction or resale home, any duplex, triplex, fourplex, basically if your real estate agent can find you a property, it's most likely eligible for this program. So this is available for any Canadian citizens or permanent residents, or even non-permanent residents, as long as you're legally authorized to work in Canada. If you're using the incentive just in Ontario, the maximum qualifying household income is $120,000, and the total loan amount is maxed at 4 times your household income. And as well, at least one home buyer must be a first-time home buyer. Additionally, they have added a incentive 2.0, where if you're looking at purchasing in the GTA, the Greater Vancouver area, or Victoria, they've increased the maximum household income to actually 150. Sorry, there's a typo on the screen, but it's been increased from 120 to $150,000. It also increases your maximum borrowing amount to 4.5 times your household income. And it really aims to give first-time buyers who are looking to purchase in, maybe more competitive or tough markets, give them a bit better of a chance. So it increases the theoretical max from $505,000 to $722,000. So now I'll just hop in quickly to the home buying process, and I can cover off some of the steps to owning your first home. So remember, if you do have any questions from the previous presentation that I just went through with all of the mortgage figures and steps, all of that, feel free to write it in the chat. And then once I end off this presentation, then I can go through the chat and we can start chatting about any of the questions you have, and I can answer them to the best of my ability. So step number 1 is going to be saving money. So you really want to review your budget and start saving for your down payment. That's really the biggest thing that keeps first-time buyers out of the market, is just not having that minimum 5% down. So if you have a budget for roughly what you think you would qualify for, or where you would like to qualify for, starting to save for at least 5%, or at least just having a savings goal, is going to be a really great first step in the process, so that you have some money saved for the purpose of owning a home, and you're at least have a down payment or plan to have a down payment. The second step is going to be speaking to a mortgage professional. So again, as I mentioned at the start of the presentation, having a chat with me, it helps both of us, because it helps me understand where you're at in the process, some possible complications if, say, you have a consumer proposal, or you have a low credit score that we need to help work on before we could get you with a traditional lender. Speaking with a mortgage professional is going to be the best starting point, because we can come up with strategies for ways to help improve your application or your position as a first-time buyer. Step number 3 would be getting pre-approved. So again, that comes after you've chatted with myself, you've sent in some documentation, and now we're ready to get it submitted into a lender so that they can look at your employment income and do a bit of underwriting just to see if the loan is possible with your income and down payment. now that you've got your pre-approval, you're going to want to start house hunting. So it's important to meet with a local real estate agent and begin shopping for houses. So it's really important that it is a local agent because they're going to know the market better than sort of an out-of-town agent. And it's really good to have a personal connection with, I guess, also both the mortgage agent you're working with as well as the realtor, because they're almost an extension of yourself. So it's great to find a personality style that fits your buying style. But you really want to find someone who's going to be able to advocate for you as your real estate agent. Once they have taken you to, likely numerous properties and you find the one that you like, you're going to end up making an offer on your home. And typically these will come conditional with a home inspection, or at least conditional in financing, so that we can make sure on our end that the lender is on board with the offer, and we can get it approved then. So once we have submitted your offer as well as the MLS listing for the house that you have an accepted offer for, we'll work towards a final approval. So even though the lender has approved your mortgage, we still need a few extra documents just to completely satisfy all the conditions. So again, this is usually 90-day statements of where your down payment is coming from, as well as just getting a void check for where the direct deposit payments are coming from. And we'll finalize all of those little things as we go along closer to the closing date. It's also at this stage that you want to get a home inspection, a home inspector can walk through the home to review any issues before the sale is finalized and before closing, just so that you know what you're getting into as you're purchasing the house. Step number 8 is going to be protecting your family by talking to us about life insurance and home and fire insurance. So as a mortgage agent, and if you're chatting with Joe as a mortgage broker, we are legally obligated to at least offer you mortgage life insurance and home insurance, but you are in no obligation to accept. But it's also great. You'll need to have home insurance for the lender to accept and finalize your offer. Once we get to closing date, all of the the last minute questions, the last minute documents, once they're all in place, the lender's happy on the closing date, they will wire the money to your lawyer, and the lawyer will have your keys. Typically, you'll get it in the afternoon, sometimes later afternoon on the closing date. And everybody at that stage collectively has a good sigh of relief because they're finally into their home. That's usually when we get the most questions, is a week out from closing, making sure all the documents are in place, just getting an idea of what the process looks like. But once it's finally closed and you have your keys, you can have a good sigh of relief. So here's just a quick introduction of our mortgage team. So we do handle the difficult conversations. We really want to help you guys and support you as much as we can. I know that a lot of first-time buyers, it's going to be the biggest investment that they've made so far. So we really want to be available to you to go through any problems that arise, to refer you to either a lawyer or a realtor that's in your area, and really help you on each stage of the process, and be really like a primary contact with the lender as well as the realtors. So just quickly meeting our team. You've already met myself. I'm Sam Thompson. You also should meet the mortgage broker, Joe Bladdock, and Terry Lynn is likely the person you'll talk to if you call our office. She handles a lot of the client document fulfillment once you have submitted your live offer on your property. So I know that was a lot, and thank you guys so much for bearing with me. I think it was almost 40 minutes to get through the presentation, and you guys have been great. So remember to get pre-approved, and you can call or text either of the numbers on the screen, or visit facebook.ca/bmortgagefree to arrange your call back today. So I will stop sharing my screen for a second. I'll also resend the link in the chat for you to book your phone appointment or pre-approval appointment with myself. And actually, it's at this stage that I'll just open it up to question and answer. So if you had any questions during the presentation, anything that you were curious about, feel free to write it in the chat, or again, you can just ask away. You can unmute yourself. That also works as well. So I will also just do a quick check to see if we have any questions from Facebook or YouTube.
Do you want to send your question?
Do you have a question? Oh, I don't know how to send it.
Okay, so for a pre-approval, I'm currently on maternity leave, and my last pay stub was in February. Would this affect getting a pre-approval? So that's actually a really good question. So a lot of lenders will consider your income as long as we have a letter of employment where your employer actually states what date you're expected to return. As long as there's a guaranteed date of return, we can use that income towards the pre-approval as well as towards the approval. So as long as you have that date in an employment letter, then we are able to use that. We do that quite often, and the lenders are usually quite good for it, as long as it's within a year of when you submit the pre-approval or the offer.
The only other question I would have actually is, how do you get somebody to co-sign? I mean, that could be a question more for like if we have to.
Yeah.
Actually, these schools.
Yeah.
That's all. I don't think I had any questions with the presentation.
Me neither.
Yeah, so I guess another question that we really commonly get, it's also a little bit based on the new stress test. So on June 1st, the stress test increased from 4.79% to 5.25%. So what this actually does, so although your secured rate when you actually purchase a home is going to be at 2.24%, it will actually be qualified at a much higher rate, which is 5.25. So we've seen that shaves about 4 to 5% of purchasing power. So especially for a lot of our first-time buyers, we do see them needing to have a cosigner. So adding a cosigner is super common, and we can even add it as a temporary cosigner. So basically, they are registered on title the same as the primary applicants. So we'll need pay stubs if they're working, letter of employment, any T4s, basically all the documents you'll need to provide, they'll need to provide as well. But we can set it up as a temporary cosigner that they can be taken off in, a few years, probably 1 to 3 years. And the great thing is that you can actually have your real estate lawyer set your cosigner on as 1% of the title, and you and your other primary applicant as 99% of title. So this is really helpful for the disbursement of any of the rebates or grants that you receive, because you'll receive 99% of them, rather than a traditional cosigner where it's 50-50, you would only receive 50% of the grants available. So by setting it up like that, you maximize on your savings. And we've even seen that adding a cosigner, even if it's a parent who's only on pension, having a fixed income of 20 to 30,000 can still quite heavily affect what you qualify for. So it's a super common option that we see in a lot of first-time buyers. There's also another question from Andrea. So could you please provide the recording to participants? Yeah, of course. I can send it in an email to you guys and get you guys a copy. It is also live streaming to YouTube as well as Facebook. So I can get you those links as well, and you can just run back and rewatch the videos there. These are great questions. Thank you guys so much for asking. This is really where you get the most out of it. It also doesn't have to be just based on the presentation. If there's any part of the mortgage process or home buying process you don't fully understand, feel free to ask it, and I will do my best to answer it for you guys.
Do you have any questions? What's your question, honey? Oh, Lee.
I don't know if we're muted or not, I'll be honest.
Me neither.
No. There's no better interviews done before. One time. I think I'm.
Alrighty, it doesn't look like anyone else has any further questions, but definitely the best advice I can give, and it's not biased at all, but it is to schedule a phone appointment with myself, even if we're not looking to do the full pre-approval, but at least getting a pre-qualification. I can look at your income, as well as some of the debts that you have, to at least give you a ballpark of what you qualify for. A lot of the pre-qualification calls that I do where we run through those numbers, we don't really see even necessarily them going through with the pre-approval until, maybe even a few months down the road. So the best thing to do is just start the conversation. You've now seen my face. I've seen some of your faces, but I would love to chat with you guys further with any questions that you have, and we can move forward from there. So you'll get a few follow-up emails because you've signed up for the webinar. And these emails are going to include things like the closing cost worksheet, as well as some updates to the mortgage industry as they happen, such as the qualifying, the stress test announcement, all of those things. We like to try and keep you up to date so that you can have all of that information available as well. But I will say thank you to all of you for coming out tonight, for spending 45 minutes with me. I hope the presentation was good and it wasn't too head heavy. I hope that it all made sense and it helped answer any questions that you guys have. And if you have any further question, please don't hesitate to reach out. But if we don't have any further questions, then I'll give it one last second if anyone has a last minute question. Bueller. Okay, it seems like everyone's good. So thank you guys again so much for coming out tonight, and I hope